to IB Today podcast. Let's talk. This is your host Muhammad Affan, and today we are doing a special episode regarding housing financing in Pakistan. So we have one of a company co-founder, Mr. Jamshed Meherhomji, who is a co-founder of Trellis Housing. So Mr. Jamshed, can you introduce yourself to the audience?
Yes, sure. So I'm Jamshed Meherhomji. I'm the founder of Trellis Housing Finance Limited. My background is that I grew up in Karachi. I did my schooling here, and then essentially I went for my university to the UK. So I was in LSE for 3 years. After that, basically, I moved to work in a bank there. So I worked in JP Morgan for close to around 10, 11 years, covering various sort of products over there. So ranging from cash, liquidity, FX, OTC derivatives, did the whole sort of gambit, and that's basically my background.
Right. So let's talk about how did Trellis came about and what was its purpose.
Yeah, so basically in 2019, in May, I went on a sort of a sabbatical from JP and went traveling with this group of people. And they were, so whilst I was on this program, when we were traveling around the world, I had a lot of time to sort of focus on, what I wanted to do next. So I was doing my sort of an MBA at the same time, digitally, with the IE Business School. And obviously wanted to switch gears and focus on social development, and I had been thinking about this for a very long time as well. With the background that I had with investment banking, and I think speaking to a couple of people whilst doing the travels, I think it all sort of sounded like the best way to actually contribute back to Pakistan would have been through some sort of social developing financial enterprise. Whilst I was on this program, I met my co-founder, Sam Yemfeld. His background is that he's a principal architect. He used to be a principal architect for Cloudera. I think before that for Fiserv. He was a senior engineer, sort of working with various financial institutions in terms of coming up with products for financial institutions. So the combination of spending a lot of time with him, I think for a period of months, I think we decided that it made sense to switch gears from what we were currently doing and actually work towards establishing Trellis. Between Sam, myself, Zain, who is also a high school friend from KGS here, we decided to sort of all start focusing on Trellis full time from 2020, and that's when we sort of initially met all here and sort of decided to launch.
So, Madhab, let's talk about, do you feel Pakistan is facing a housing crisis? You bring in Trellis, and then, what was the purpose behind it? You want to cater to social development, but let's talk about the crisis on hand. Do you feel there's a housing crisis?
I think so. To be honest, the statistics are poor in the context of when you're measuring basically asset ownership, and you're looking at basically how do people buy properties all around the world. In the context of Pakistan, majority, or I would say 95% of all transactions that take place are through funds that people have from their own wealth, right? So the only people who are actually ever going to be able to buy a property in Pakistan typically used to be people that come from generational wealth. And as a result of that, your arm of arm that could, in other countries basically go into a bank and then basically apply for housing finance and get a property is nowhere there. So in the West, basically 80 to 85% transactions in real estate are all on the back of mortgages. If you look at basically the overall size of housing finance that's dispersed in a country, and you divide that by the GDP of a country, that gives you a good indication of what your mortgage penetration ratio is. In developed countries, it's anywhere between 80 to 110%. In Central Asia, it's anywhere between 20 to 30, 20 to 40%. Pakistan is 0.25%.
So why do you think that do we have so low mortgage?
So, I mean, if you compare ours with India, is always a good country to compare ourselves to.
Bangladesh is now our comparison.
Bangladesh is also a good comparison as well. They've also, been able to increase their housing finance penetration ratio to around 10-12%. I think it's more, so it's a combination of things. I think the first thing is that good regulations that help in terms of promoting housing finance is important. That was something that basically the last government that came in had spent a lot of focus, I think, on establishing public institutions that help in terms of actually promoting housing finance, setting up refinancing organizations like the Pakistan Mortgage Refinancing Company. All of these things are needed in order to have housing finance scale in a country. Aside from that, we had our foreclosure law. But why do you think we have, okay, these companies are now built, these organizations are built, but do you feel it was the lack of regulatory body or policies that made sure that we didn't really get mortgage financing? Because now banks are mandated to give enough funds for housing finance. Yeah. So I think it's a combination of the regulatory side of things. And the second thing from our perspective is the volatility of the economy. That doesn't bode well for growth of the mortgage sector in any country. Okay. You look at our country and basically see what's happened in the last 6 to 12 months, right? True. Your currency is depreciated by 30%. Your inflation's at 20%. You've had a political shift. You've had changes basically you had an entire program of housing finance that was basically being run for 3 years, and then overnight the program has basically vanished. So all of this volatility actually plays a very bad role in terms of promoting longer term finance, right? So housing is you take a loan for 20 years, 25 years. If there's so much volatility, why would an investor want to invest in housing finance? Why would a bank want to basically, commit themselves to 20-year capital? Do you know? So the environment is not very conducive for longer term growth, but it is still something that I think Pakistan is always dealing with chaos. I think that's not something that's going to go away. And despite that chaos, there's still enough demand in the market for people to get onto mortgages. Right, so real estate in general is the most wanted asset class in Pakistan. Yeah. So that's the most secured. Everyone wants to invest in real estate. Yes. But let's talk about technology. You talked about you have a lot of engineers who are working with you. But how does technology play a role in the real estate sector? Yeah. So I mean, just think about the mortgage for a second. I think the mortgage is probably one of the most complex consumer product that's actually out there in the market. You're talking about anywhere between 75 to 85 steps that take place within and outside an organization before you can issue a mortgage. You're talking about 9 different stakeholders, either internal to the organization or external, that have to work together like a factory floor before a mortgage can actually be issued.
So how long does it take?
Yeah, so even in the most sophisticated economies in the world, you can't issue a mortgage anywhere less than 4 to 6 weeks. So this is not instant lending. This is not something you can basically do overnight. The infrastructure that we have in Pakistan that would enable digital financing is still on the poor side. I think there's still a lot of work that's being done by certain institutions that help in terms of being able to connect with different organizations digitally. Like I'll give you an example. When you're doing a mortgage, you need to do a proof of ID. You need to do an AML CFT check. You need to do a...
What is ALM?
AML?
AML.
Anti-money laundering or counter-finance terrorism. So every organization that is doing lending has to be lending or payments or anything. You have to make sure that your lending is in no way essentially facilitating terrorist financing. And so we have, certain prescribed lists that we have to go
These are
through.
basically the eligibility criteria that we are checking right now.
Right.
Okay, the guys who are eligible
Yes.
for a housing finance.
Yeah.
So it's you have to do those anti-money laundering, terrorist financing,
Yes.
and what particular requirements do I need if I want to get a housing finance?
Yeah, so you can be a salaried individual, you can be an informally employed, formally employed, you can be a businessman, you can be a consultant, you can be a contractor. Any form of employment we will look at. I think the main thing is that you need to have your employment verification documents with you, right? So you have salary slips, or if you work in a, for example, an informal shop, we may come to basically look at your khatas, your invoices, etc., so that we can estimate what your monthly employment is. If you have a bank statement, that's good. We'll look for 6-7 months of bank statement history. We'll look through your assets and liabilities and see whether you can actually afford like a mortgage over a period of time. And I think once we've done all of those verifications and background checks, then we'll issue you an offer letter. So ultimately,
How long does it take?
So if your so the main thing is the application process would probably take around 4 to 5 days from our perspective. And again, the benefit of having the digitization is actually what's enabling us to be able to actually operate in such a quick manner compared to our incumbents. And then in terms of at the review stage, where you have to do a lot of the physical verifications, like the property valuation, your client's income verification, etc. That's all dependent on the client, right? The more organized you are, the more documents you have ready with you, the quicker we'll be able to do it. But typically we give ourselves at least a week to 2 weeks to basically have all the verifications completed, and then issue the offer letter, right? So this isn't this, as I said, this is not your chump change that we're giving out. This is 3 crores, 4 crores, for loans.
What's the maximum?
So we go up to 3 crores currently. From a regulatory standpoint, we don't have any sort of restrictions. We can go higher as well, but our focus is on the low and the middle income side. So that's why we don't want to focus on anything higher than that at the moment.
Okay then. And then moving on, we talked about mortgage. Then you talk about technology. How do you think
Yes.
technology is playing a role in your industry?
Yeah, so if you can imagine, what we were talking about previously, 75 to 80 steps, 9 to 10 different stakeholders, some internal, some external. If you didn't have technology to do this, you'll be roaming around with, massive files and, working across departments. And I think one of the main things that we didn't want to do this year was, when we started, was to make the same mistakes as obviously that have been made in the past. And so from our perspective, we have fully digitized sort of task list that basically works across the organization, and then also connects with all the partners as well who need to do the physical verifications. So digital forms, digital onboarding for the clients, task orchestration is all done digitally across departments, across organizations. This concept of extended enterprise, where you work across organizations in a digital manner, that's some of the most sophisticated organizations in the world have also not gotten to that stage, right? But from our perspective, that's something that we believed it from the start. Then obviously in terms of the risk models that we work with, these are all created internally, using Python. Our chief risk officer, whilst he was working with us, he also started learning how to code as well, and so he's created all of the models himself. So the credit models, the property valuation models, all of them, and they're all data driven. So anything that you fill in basically in a form, it gets cross-referenced with hundreds and thousands of data points that we collect in terms of property prices and construction raw material prices.
I feel data. Do you feel
Yes.
the data is credible that you have property valuation data? Because there is a lot of there is white and then grey money valuations that are done.
Yeah. Well, I think the thing is, you have to be able. There's obviously everything that you have to take as a grain of salt, and there has to be some element of data cleaning that happens, or data hygiene that you look at before you can actually start making decisions on that data. But ultimately, you're talking about 100,000 data points. For example, from all of the listings that you have on multiple websites today. There is an element of truth when it comes to market prices. Market prices don't lie. They may lie in terms of how, for example, they're going to pay for that by saying this is white money, this is black money, etc. But your listings on all of your sort of online listings are all real.
Right.
So and it's in line with, obviously, I think, verifying that with the broker community, and obviously at the end of the day, it's a secondary source of truth that we basically look at. So when you're doing a property valuation, you're physically actually sending an expert onto the site and actually doing the valuation by cross-referencing the other properties within the neighborhood, for example. But then your data that you have in the background for that same area, for example, like a 3-4-5 kilometer radius, will also give you a secondary source of truth and say, okay, well, all the other properties are in this area for this much. So is a valuation in line with that?
Okay then. Acha, I wanted to ask, because through its housing finance, you talked about banks being the primary people who are involved in this housing finance. But how does Trellis differentiate between any other bank and their housing financing?
Yeah. So I think there's a couple of things, right? So obviously, I think the fact that we're a digitally mature organization and we operate internally in an efficient manner, that has a direct impact on the client experience. In terms of the turnaround times for being able to originate a loan on our side might be a few weeks earlier than, for example, what banks might be able to do. The other thing is that the organization and the products that are being made are being made in a way that it's taking into sort of context the customer experience from the very start to the end. Our main aim is to be able to make this process as efficient for the clients, reduce the number of times that they have to come into the branch to basically submit their documents, or work with them digitally wherever possible. So whereas on average basis, a client might need to sort of come 7, 8, 9 times for a mortgage in any part of the world. By the way, this is not something which is just Pakistan. With Trellis, you can fill in your mortgage application form online, you can fill in your inquiry form online, you can submit all your supporting documents online. You don't need to come into the branch every time. If you have a question, just ask our team on the WhatsApp chat. That's what our clients want, right? And I think that's the main thing that we've been focusing on. Other than that, I think with banks, I think the will is there, obviously, for financial institutions to continue to lend. But when you have an entire organization that is essentially specialized exactly towards a product, then the type of research and the innovations that you can basically expect from that might be different to what you can expect from a financial institution. Yeah.
Right. So towards the end of the episode, we have some rapid fire questions that we wanted to ask you. So
Okay.
before, just one word, if anything comes to your mind regarding that particular point.
Yeah.
Islamic banking.
Ethical.
Okay. Conventional banking.
Ethical.
And Trellis housing.
I would say efficient.
Commercial, real estate, or residential?
Residential.
Okay. Mortgage financing.
An enabler.
Okay. Financial literacy.
Low.
Okay. IB today.
Excellent.
Okay then. And before we end the episode, do you have anything advice that you want to give all these people who are watching right now? Perhaps maybe young graduates who want to find a house, who want to look for a house. Any advice for them?
I think, to be honest, even if you're looking at this from a consumer perspective, in terms of getting a loan, or if you want to just be more engaged with, financial institutions that are working in a different way, I think that's what we want to really try to promote. So over here, I think we're always having talks. We're having whole sessions basically within the organization. We're having we want to start creating an enabling environment for technologists to also come in and talk about their issues and their problems. We want to work with graduates who are, good with research, good with, good with numbers, etc., to really use their skills and help us grow, help themselves also grow in terms of all of the learnings that they'll get in terms of working with us. I think that's probably my main sort of message for the team.
Thank you for giving us that insight. It was wonderful talking to you and getting this insight. People who are looking for housing finance or looking for any commercial house financing as well. Do you provide commercial as well?
So not at the moment, but we are looking into it.
Right. So, thank you for sharing that insight, because I feel mortgage financing is a huge element that our society lacks, and I feel if it's done on a sustainable pathway, I feel that is the future I think that we should be longing for.
Yes.
And so thank you for coming in, and I hope all of you enjoyed the episode. I certainly did, got the information that I wanted, and it was a wonderful conversation. If you want any other guest that you want us to interview, do let us know in the comment box. Thank you. Allah Hafiz.
Thank you.